So today is lesson six, and seven of our 8 weeks weekend classes. Today is this weekend is the third week, so we still have about 5 weeks to go, and we hope that we'll be able to do a lot. We'll be able to, our st trading lives and stories will change from all these things that we are learning. So we are going to do a quick review of market structure and liquidity, as I have come to understand that these two concepts are the most important concepts in the forex, market. If you master these two concepts, then you are getting somewhere. You'll be able to get somewhere. Um, so, um, So from our last classes, we were able to define market structure, but I want to go through again quickly, and then we will go to the chart and then do a practical illustration of what all these concepts means. So market structure is simply the roadmap of price. So just like if you are traveling by air or by car, there is a road or a map that you follow. In the forest market, structure of the market shows you the road map to any destination that you are going, whether you are going or you are coming. It is the structure that will show you the road map. It shows if the market is trending, that is making higher highs, higher lows for a bullish market, and then lower highs and lower lows for a bearish market. And also shows if there is sideways or consolidation or ranging happening in the market at certain times, sessions, or seasons. As soon as there is structural shifts, um, and that happens when price breaks a previous high or a low. So once price breaks a previous high or a low, we call that a shift, a structural shift. So I'm going to go ahead and then illustrate what I've just said. So this is a chart for volatility 25 on the daily time frame. This is the chart for volatility 25 on the daily time frame. Um, so we can see that all this movement to the upside like this, starting from below here, or all this movement from the up here going downside like this here is like a road. So this is showing you the structure of the asset or the structure of the pair. And so on this chart, we can clearly see from what we see or where we stand, from what we can see here right now. I can clearly see that the market is bullish. Bullish in the sense that we see the market makes a high here, then it makes a lower high, and then it makes a higher high and makes a lower high. Then it makes a higher high again and makes a lower high. And it gives us a higher high again and has given us a lower high. Has given us a lower high. So this is what we can say or call an uptrend. This is a clear uptrend. So in an uptrend, we see higher highs, lower highs, higher highs, lower highs. And as market is moving up, high, low, high, higher high, low, high. This is what we expect in a bullish market. So we should expect another high. And then after that, we should expect a pullback. There's no way the market will keep going without any pullback. So where do we say there is a break of structure? Where do we say there is a break of structure? So once a previous high or low is taken out, okay, so once a previous high or low breaks, then there is a shift, and that is break of structure. So let's say this was a previous high up here. The moment this moved from down here, took it out up to this point, we can call this break at this side as a shift or a break of structure, normally called BOS. So this guides you and helps you to know the characteristics of the bullish market. So we have another break of structure here and another break of structure here. Okay, there is also another concept called change of character. So what is change of character? Change of character is, let's say this is a bullish market. So now that we expect price to give us a higher high, if price fails to give us a higher high and stops somewhere here, like we are seeing on Vince 50 as 25 right now, if it gives us a lower high, let's say somewhere below here, it gives us a lower high somewhere here, okay, and it moves down to take the last structural low, which is this point. It takes this point out like this. Then we will say there is change of character or change of direction. At the same time, it is a break of structure, but the first time that it does that, we can call it a change of character, or it's called a change of character. Then it means that we should expect the market to move from a bullish direction to a bearish direction. A bullish direction. So what do we expect? A lower high and a lower low. So where is the break of structure, second break of structure that we see here? Price broke the low. Price took out the low. And once a low is taken, at a point, we would expect a pull back. And then we expect price to continue going down, breaking structure again. So we see another pullback. Then we see price moves down. The moment we see price takes out the last structural low, this area, that is going to be change of character again. So this is the basic movement of price. And if price comes down and then stops somewhere here, then we'll be able to, and do this, gives us a second structural shift like this, then we can say that we are now bullish again. So we expect a retest. We would expect a retest and probably expect price to go up higher. So it gets complex and complicated, especially when you are using multiple time frames. It's much more clearer when you are using higher time frames. You see everything clear. The smaller time frames, there will be a lot of movement, and sometimes you are not able to see the structure well. But Once you are a trader and you are learning, you should be able to identify on whichever time frame you are using, whether the market is bullish or bearish, or when the market is making the structural shift for you. So on vein 25 right now, um, for me, I will use this low as my structural low, like on the higher swing low, the last low that gave us the all-time high or the highest point on this chart. That's what I will use. So I will use these 2 points. And from this low, did we break structure? Yes. This was the high that gave us that pullback, and we have broken that. So we broke that and went up. Therefore, this low and the current high that price gives us becomes my structural swing structure. So what did we say from our previous class? You can use the Fibonacci to measure from the low to the high, and then expect to buy in at what discount? Discount is below 50%. Okay, so below 50% is where? Anywhere 61.8, 78.6, 88, even up to 100, up to this area. So this one price came straight into like 88%, 76.8%. But why did this buy or rejection or movement take place? It took place because we have seen an institutional reference point here, which is a fair value gap around this area. We will learn all that later, those who are new. But those who are in trading already, you understand, you might have an idea of what a fair value gap. So price came into this fair value gap here, which is the imbalance. Okay, so from our liquidity class too, we learned that market draws to money, draws to imbalances, draws to lows and highs on the market. So this is one of the concepts. Market has been selling, 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 but where was the direction? It spotted a previous low at 61.8% here, and it wanted to come and sweep it. So this is liquidity. It came to take it out. Okay, this is an internal. So price take out the high, an external high. It sweep, it moved down to take an internal low, which is the movement here, which is the low here. And when it took the internal low or internal liquidity, it took that and dropped into an imbalance, which is an institutional reference point. Previously, you see this big candle that moved up. Okay, it means large volumes of money or orders entered the market and it left an imbalance. So it took liquidity and entered into more liquidity. Okay, entered into big orders, left orders. There is nothing it can do than to react. So you see the engulfing, we see an engulfing candlestick that shows that market will likely sell. So we also did candlestick patterns and we learned about the engulfing candlestick. So the green candle, the bullish candle, took over all of the last bearish candle. That is a good sign that we should go bullish. So sweeping liquidity or this low, entering into fair value gap, and engulfing, these three concepts or ideas put together has given us a sign that market will do what? Will buy. And market has engulfed. The engulfing is the confirmation. Already we are also in discount zone and we should be looking for a buy. So this is a perfect trade setup. Okay. So whether this movement will go up and give us a new high, I don't know that. I cannot tell until we analyze. Okay, we look at it closely. But at least we've been able to have an engulfing candle, which is showing us that price will definitely move to the upside a bit. Okay, so if we are looking at it that way, then for me, I would expect market to give us uh, market to give us at least equilibrium. So on the 50%, okay, on the 50%, I'm not saying market to sell from here, but at least market should give us equilibrium, 50% for this movement, at least. It should give us up to 50%. What is the characteristics around that 50% area there? So I can see that there is an imbalance here, this low and this, the low of this candle. Price is already trading into or is already reacting in the imbalance. But I believe price will sweep the imbalance away. And there is an imbalance to appear above this area on the 50%. So I believe price might react from this area. We might see a reaction from this area for a drop, something like that. So with this confirmation, I believe that price is going to buy. And if we want to take a trade, we can zoom into the lower time frame and see if we can have some setups on it. So that is a basic understanding of using structure to structure. So let me take the fib out and let's go quickly into 4 hour time frame. Okay, good. So on the 4 hour time frame, what is the market doing? The market has been bearish. So that's what I can see. So we see low, a high, lower high, a lower low up to this point, a small pullback, another lower high, and then the market pushes up. So we will see this on 1 hour clearly, but there was this high here. Let me go to 1 hour. Good. Yeah, so I think there's this high here that I can see that market hit that area, dropped down, and then took it out. So once we take that out, we are now seeing a change of what? Character. We are now seeing a change of character to the upside. So we drop again, we dropped, and then we had a new high. Then we dropped again, and then we are having something like an equal high right now. My mouse is troubling me a little bit. Good. Something like an equal high, like double top, something like that. So whether we are going to see price sweep this low into this area or not, I cannot tell because we are not doing that kind of analysis right now. We are only learning structure. I cannot tell, but we are seeing clearly that from 4 hour perspective, the market has been bearish. But on 1 hour here, as we are seeing a break of structure to the upside, which means that price has been selling and we are now seeing something like a pullback. Okay, something like a pullback. So let's go back to our PPT. All this is just a review of all the things that we've been discussing already. So if you have any more questions about what do you call it? Market structure, you let me know and then we can go over. Um, so in the context of market structure, in market structure, we have the impulsive moves and the corrective moves. Okay. And when we get a break of structure or a shift, as I've already explained, we call that we can have a range, structural range or swing range out of that shift. So the best example, sorry for this chart. Yeah, so the example is this. So on this chart, we had this high, we had this previous high here, and then we had this low here. So, and we had this high. So from this low, we took out this high here before we got to that higher high. From this move, we moved and took out this, and we got this as a new high. Okay. So that is our last internal high, sorry, low when we were moving up. So once market drops, we hit here, and then we go up, but we failed to get a new high. And market drops into this area. Market drops into this area. So once we broke this low, are we going to say we have a break of structure from if we are using this low and this high as context? What do you say, guys? Is that a break of structure?
Change of character.
Okay, if we are using this low and this high as our context, because this low took out this high. So in that context, we can call it a swing, a structural range or a swing range. Okay. So once we failed the swing and took this low out, at this point, are we going to call it change of character and a shift of structure?
Yeah, it's a change of character.
Okay. So yes, it is, but I don't believe it's a change of character. I only believe it's change of character only when we take out that our protection, the low that took the high out and gave us the swing range, the low that broke structure. So until a move breaks structure, we cannot say it is a swing range or swing structure. So you see, this is what happened. So now we have point A to point B like this. And this is the point that we measure. Okay, we measure for our premium and then discount. Okay, so the move that breaks the structure, the move that breaks the structure, the move that breaks the structure, okay, is called the impulsive move. Impulsive move. And the move that is the substructures. The move that is to give us a pullback or a retracement for us to expect a new high is called the corrective. So we got a corrective move up to this point, but it failed. Let me even make it look like the way it is. So we got the move straight like this. but it failed. We got something like this. It failed to give us a new high. So at this point, it failed. Then the move was coming down. So here we can say on the time frame I'm using, I'm not seeing any um I'm not seeing any low within here that was broken. Price just consolidated and moved sideways to this area. Okay, so it just did like this and moved here. Then it took out the low. Yes, it has taken it. So this is break of structure, change of character within this range. But the moment price trades down and took out, enters into the discount zone where we should have been buying. And then it failed and took out uh, the 100%. The moment that happened, this is at this point is where we have the change of character. So this is a sign that we have change of character. Okay. And we are now that we have change of character, we should expect price to come in like this, at least into discount, sorry, premium, so that we can we can sell to
Yes.
get a new low.
Okay.
This is what we should expect. So the range you are using, the context, until that low or that high is taken out, or everything that is happening within is just substructures. We cannot say there is a change of character and a break of structure. Okay. Anything that is happening within, that is why it's important to view the market from the higher time frame. Okay. So if you see this as a break of structure and you are only looking for buys, sorry, sales, no. Okay. This might be a sweep. This might be a sweep of liquidity, just to sweep of liquidity, okay, for us to move bullish or get a new high. It might be, okay, it might not be also. Okay, so we are learning. So what do we need really to see? We need to understand the structure. Okay, it is the structure that will help us to be able to understand what is going on the chart. So it is at this point that we have a shift. We have a shift. So are we going to sell to expect a new low? And what will happen if, in case price sells, give us the second break of structure and takes out this low, this one? Then it means that for this external high, previous external high here, because we only have two external highs. This is the previous one, and then this is the current one up here. The previous external high and the current one up here. Those are the only two highs. Okay. So the moment we drop to break structure again, and then we take out this low, it means that we have invalidated this high and then this high. We have locked them up. Okay. And therefore, we are now changing character to go bearish. So if in case this happens, we should expect this high here at the top here to be protected. No matter how far price goes up, this high should be protected. So, but why would this high be protected? Why would this high not be taken out after this external low has been taken out or change of structure has happened? Why will it not? If we get enough liquidity around this zone, within this range. So we are now going to have a new range from this high to this low. In case we break that external low, we are now going to have a new range like this. So within above the 50% up here, there should be enough liquidity, consolidation, and internal highs here, so that if we pull back, if we break this high and then price pulls back, price will be able to sweep a lot of double tops or liquidity to push price into our premium zone for us to have that break of structure from the
So,
higher time frame perspective. If we don't get enough money or orders inside this range here, around this area, then the only option the market has is to go up, because we know that there are stop losses, people who are also waiting for the breakout to buy here, up here. So the only option is for market to come up, sweep all the stop losses, fill the buy orders, buy stops, and then fake that it has broken a structure for a new high, then drop a little bit, go up again, and then fail once more time. And this time we are going to have a big move that nothing will stop it. Just like price has been selling and nothing stopped it until it took this low. It will sell, sell, sell until it takes this low. This will be the target. Until we take this low, there's nothing that is going to stop it. So sometimes you see price selling, selling, selling. You ask yourself, why? You enter buy, no, it take you out. Then you reanalyze, enter buy, it take you out again. You are fed up. Okay, where it is targeting, you have no idea. It's targeting a place that you have not even think of or thought of. Okay, so and that's why it is important for. So the most important concept that we need to learn is mastering structure, understanding structure, both um, within structure and then external structure. And once we get that right, so we have the impulsive move, the move that breaks structure, the corrective move, that is the pullback to give us the opportunity to continue the trend. And then once we have that break of structure, we get a structural range or a swing range created. So I think the time is up for this session. So yeah, we have a lot to do today. Let's pause it and then ask for questions up to this far, and then we can continue with the next session with reviewing liquidity. And then we go ahead to put all of them together. So any questions? Any questions?
I don't have a question.
You have a question?
No, no,
Okay.
it's clear.
Guys, any question? Okay. So this is support and resistance. I'm waiting for any question, guys.
No question from me.
Okay.